Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some articles. It's about oil and natural gas. I kind of combine those two together. And you're going to see kind of what people are reading out in the world about oil. What we know is that the inventories have been drawn down over the summer. We are coming into a little bit weaker part for oil demand, which is between summer driving season and winter heating season. And demand cools a little bit. We usually see a little pullback in prices. And in all honesty, we've been very resilient in those prices. We haven't really seen a large pullback or a crash. I know we've pulled back in the 80s, but I think that will change probably in the winter when the Strategic Petroleum Reserve release ends. And I'm going to go over some articles and how confusing some of this is in terms of some members are cutting oil, some are releasing it from the Strategic Petroleum Reserves, and what kind of the opinions are of Yellen and what prices are going to do this winter. So let's dive in here. Let's see what's going on. And I'll throw my financial opinion in with it. So the first one I have here is Biden sets million barrel a day oil release to tame prices. This is what he's doing to lower the prices. This was released 3/31/2022. They came out with this. They said, you know what, we're going to release 1 million barrels a day to basically try to control the prices from going up. We need to push these prices down. And there's no real, this isn't a solution. This isn't even a Band-Aid. This is like emergency support, kind of just trying to outright manipulate the price, which, you know, it's fair. OPEC does the same thing when they cut, but this is so short-lived that you're just taking it from inventory and swapping inventories. It says OPEC Plus co-led by Moscow balks at ramping up production. President to speak on efforts to reduce energy prices Thursday. He only cares about reducing the energy prices to get reelected. He doesn't care about solving the long-term problem, which is we don't have the worldwide production to support demand levels that are increasing at where they're at. We've basically been able to hold the oil prices flat over this period by these releases from the Strategic Petroleum Reserve and from lockdowns from China, and basically demand being held back, I should say, from these lockdowns over in China. China's also been going through their own problems with their economy. So that's one area there. We look at this. Here's another article. It says Biden's wasteful SPR release, April 4th, 2022. So it's a little bit after the other one. It says President Biden's release of 180 million barrels, 1 million per day for 180 days will prove to be wasteful, futile gesture. Why both OPEC and Russia must cooperate and not further reduce oil supply to the global market to give price relief to the U.S. consumer. They did not cooperate on the prior 50 million barrels that were released in the past few months by President Biden. Oil prices stayed high. Everyone knows the amount of oil that the U.S. has in the Strategic Petroleum Reserve, or SPR, just like you know the stack of chips on a poker table. It is simple matter to run Biden out of this game. And then they go into kind of the SPR. It says the SPR was built to alleviate domestic supply shortages, but there are no gasoline lines or crude oil shortages. The Biden administration is just unhappy with the price of war. There is no escape from the fact that the U.S. voter is going to pay this price as consumer or taxpayer. So that's their opinion on the SPR release. It's basically a waste if OPEC and Russia do not cooperate. Prices will remain high. In my opinion, it did do what it wanted to do. It slowed the price move up. So I think he was successful at actually slowing the price. It doesn't mean that prices will necessarily fall. The market is that tight. We may have gone to $200 or $250 a barrel without these releases. We don't necessarily know that. Looking at other stuff, it says the U.S. is evaluating need for further SPR oil releases after October. This was released September 8th, 2022. U.S. President Joe Biden's administration is weighing the need for further releases of crude oil from the nation's emergency stockpiles after the current program ends in October. A Department of Energy official later said the White House was not considering new releases from the U.S. Strategic Petroleum Reserve at this time beyond the 180 million barrels that the president announced months ago. But they are considering further SPR oil releases after October, at least according to this article here. We've got OPEC. This one is released 8/28/2022, late August. It says OPEC sings the same old song, just with new lyrics. Oil producers want higher prices, and as always, they're putting the blame on speculators for the market they don't like. I know that OPEC is not happy with oil prices being in the 80s. They think that there are potential paper games being played in the oil markets, very much like the precious metals market. This guy here that you're seeing, Prince bin Salman, he thinks that we are controlling, we, the United States, the price of oil through the paper markets. There could be some validity to it. We usually see a pre-market dump at the same exact time when prices go down. So I would probably tend to agree, because I don't know why someone would come in at the same exact time in the pre-markets, dump a bunch of contracts all at once, and have the price go down. So there could be some validity to it. It's much like the precious metals markets, which happens, the same thing happens in those precious metals markets as well. Now, here's another one. And remember about the SPR being released being wasteful unless you get the agreement. OPEC agrees to cut production after oil price slump. This is September 5th, 2022, pretty recent. And it says OPEC said on Monday it would reduce oil production next month, the cartel's first output cut since the depths of the pandemic, as it braces for a global economic slowdown to hit demand. The Organization of Petroleum Exporting Countries and allied oil-producing nations, including Russia, agreed to shave 100,000 barrels per day off their production targets in October. Just a month ago, the OPEC group agreed to increase production in September by the same small amount, equivalent to about 0.1% of global demand, after coming under intense pressure from the United States and other big oil consumers to do more to bring down energy prices and inflation. I don't think they like what America's doing with their SPR. They're going to cut the production. I don't know if there's going to be further cuts, but it seems like Saudi is not happy with what America's doing. We are losing our alliance with Saudi. We've got Janet Yellen here, September 11th, 2022, piecing this all together. Oil prices could spike in the winter, Yellen says. Really? Wonder who else has been saying that. Because the SPR releases, when they end, could lead to a spike. She says, Americans could experience a spike in gas prices in the winter when the European Union significantly cuts back on buying Russian oil, adding that a proposed Western price cap on Russia's oil exports is being designed to keep prices in check. It's a risk, and it's a risk that we're working on the price cap to address, or try to address. It's not going to work. The possible price increase could come because the EU will cease, for the most part, buying Russian oil and impose a ban on services that allow Russia to ship oil by tanker. The price cap plan agreed to by G7 wealthy nations calls for participating countries to deny insurance, finance, brokering, navigation, and other services to oil cargoes priced above yet to be determined price cap on crude and oil products. So they're trying to put a price cap on Russian crude oil. That is their solution. Now here's another thing as well. This is natural gas related. You look at natural gas, a natural gas shortage is looming for the United States. I thought we were this huge natural gas powerhouse. What does she mean by a natural gas shortage? This was posted September 19th, just recently. It says, as natural gas demand around the world breaks new records, U.S. shale producers are struggling to keep up with demand. While natural gas prices in the United States fell after a railway strike was averted last week, it looks likely that prices both at home and abroad will spike this winter. A hotter than expected summer and lack of alternative energy sources have left U.S. inventories below the seasonal average. So we're getting tight on natural gas, even though we're supposedly this huge powerhouse of natural gas production with all the shales we have. If you look at the Goring and Rosenzweig's information, they are saying that we've already drilled a very good chunk from these natural gas shales, and that they're actually going to start to roll over and head lower over the next few years. So not only do we have a problem worldwide with an energy crisis over in Europe, with problems with Russia and the sanctions and the war, and then the complete shutdown of Nord Stream, which is the gas being sent from Russia to Europe. We're also going to see problems in the United States probably in the next couple of years. And that's due to us already drilling a certain percentage from these shales. We're reaching about 60% at some point in the next few years. And then we could see a plateau and a possible decline in production from natural gas in the United States. That leaves very few countries exporting capacity in the world. And I think that's where the most valuable natural gas and energy will actually be priced at, because everyone's going to fight for the exports. And if there isn't much exports to go around, people will be fighting for those exports with higher and higher prices. And in a free market, things are rationed through higher prices. So I think that's coming. Also, to touch kind of on this, the Permian contributes another 12% of the U.S. total gas output, and the rig count in the Permian has been down for 2 weeks in a row, according to the latest data. Less drilling means less associated gas to add to the nation's total. Meanwhile, on the demand side, electricity generation in the United States is seen reaching a record high this year. Kemp noted in the column, driven by the post-pandemic economic rebound, a hotter summer also contributed. A cold winter would certainly push gas consumption even higher. Another contributor is the lack of alternative sources of electricity generation. Coal plants are being retired, and droughts in many parts of the country have compromised its hydropower capacity, the Reuters analyst also noted. While this is happening at home, demand for gas continues strong across the globe. As everyone seeks to stock up on fuel this winter, U.S. energy companies are exporting liquefied natural gas at record rates, and disgruntlement at home is beginning to rear its head. It says, we appreciate that Joe Biden administration has been working on European allies to expand fuel exports to Europe. A similar effort should be made for New England. Come down here, it says in May, John Kilduff from Again Capital told CNBC he expects gas prices to top $10 per MMBTU and maybe even reach $12 to $14. This is a commodity that trades parabolically a lot. It's no stranger to parabolic moves up and down. It's incredibly volatile. And it is also has the ability to reset. We could get to 10 or 12, and if you have a cool August, then we could be down below $8 again, he said at the time. I very much like this type of movement myself, because if we can get a spike lower, I can get cheap shares, ride it up for a very big move. Some of these companies move 100+% on a move from $8 to $12 or $8 to $14, and you could get very good returns. It says the Energy Information Administration this month revised its gas price forecast for the full year upwards, seeing the commodity average $9 MMBTU. It says, in the meantime, however, until this increase in production materializes to a degree that begins to affect prices, there seems to be only one way they will be going, up. With heating season around the corner in both Europe and the United States, and with a lot of people in both places using gas for heating, the price outlook for gas does not look good for a consumer's perspective. It does look good from a gas exporter's perspective, however. So it looks very good from a natural gas producer. That's where I think there's a lot of opportunity, especially in those countries that can export their production. And here's another thing to think about. Yellen and all these guys, they want higher oil prices. Yellen and even Powell has said that they expect oil prices to go up during the winter. Here, we've got tight natural gas market. There's people who expect natural gas to go higher because of supply and demand tightness. I expect both of those things to occur. I expect higher energy prices. Now, if we get higher energy prices, what does that do to inflation? Higher. And we're seeing that the bond market is increasing interest rates. They're selling bonds and yields are going higher. I also think that they agree that the gas and oil market is tight and that we are going to see higher prices in gas and oil prices, which will lead to higher inflation. Higher inflation, higher interest rates, and the cycle continues with higher rates of inflation. So I think, by looking at the data, just by looking at news articles and kind of piecing this all together to weave a story, the story that I'm reading is physical oil market tightness will remain. If they do not release strategic petroleum reserves in the winter, we are probably going to see a price spike, given the opinions of Yellen and Powell that I've read, that a spike in oil prices, gasoline prices, and natural gas prices could happen this winter because of physical tightness around the world. Those spikes will also work their way into inflation figures. So we are not over the hump. I don't think we're turning over and lower. I think that we are going to remain high in inflation and that we could actually go up in our inflation rates this winter. That's what I've got, guys. If you guys need help navigating this market, if you want to know what the most leveraged plays to natural gas and oil are, sign up for the Platinum membership in the finding-value.com. You can see it right there. You can see it there. You can sign up and you can see which companies I think are the best play. You can see when I'm buying them this fall. I'm already heavily positioned in them on the long side. I bought them at very good prices, and I'm going to buy more as they fall back this fall. Fingers crossed if we get the pullback that I want. We may not. We may head higher. It seems like people are recognizing this scenario here and are starting to play the long side. They're positioning in the companies. But if you guys like the content, give me a thumbs up. Subscribe to the channel if you haven't. And we'll catch you next time. This is Finding Value.